Hi, welcome to Trading Corner. I'm joined with Raj this week. Raghav's in sunny Thailand, lucky him. We're just going to jump straight in. I think the main thing to really talk about this week is the margin. We've had a decent pullback. If I just show you this curve here, we hit highs about a week, 10 days ago, highs of all year, and we've pulled back significantly. So I'd love to get your input on the middle distillate part of the curve, but some of it's also been attributed to crude. We've rallied quite a decent amount now in DEC DFL, Jan DFL, which is all contributing to a weakening margin. But also, the light products, they've also come off quite a lot. I think just speaking with Raghav over the last couple of weeks, there's been fairly consistent gas snap selling. I think the flavour of the last few days has been a lot of naphtha selling. So more compression on the tails of the margin. It's just the middle distillates has been the main story of the year. The relentless strength. We had the lack of the draws over the summer. We're going into winter and we've finally got this cold weather. Is the market, I think I know what you're going to say, but this is where you'd expect the Gasoil stocks to be drawing and actually the crack starting to hold up. Absolutely. How is it playing out?
I think if anything, we've seen a clearly very exaggerated effect on the Gasoil part of the margin curve. But so far, really, the big spike and the sell-off is probably more related to the sanctions and the Russia-Ukraine story. So starting off with last week, why we saw the spike was arguably just tighter ICE guidance on what they were going to do with regards to accepting any cargoes for their assessment from other countries. So far, the European sanctions have been taken a little bit lightly, and maybe the enforcement has been a bit lax. But this time around, ICE have basically given us very strict guidance on what they will allow into the assessment process for Gasoil.
This is important for just expiry or for every window?
This is for every window. This is Gasoil in general.
Okay, so yeah, exactly. You have contracts, swap contracts that's priced against the paper contracts, but also the physical cargoes. So if you're limiting the amount of physical cargoes that can go into the window, of course we're going to rally, right? It does make sense. Exactly. So now we've sold off of it. Is that because, perhaps ICE are having a bit of, pushback on which cargoes are allowed in, or is it purely speculation on the political stuff?
Nothing has changed from ICE's end so far. If anything, maybe the sell-off started to ease a bit once some of the shots had been squeezed out. But a large bulk of the sell-off is probably attributed to Trump's comments about Russia-Ukraine potentially easing.
Yeah.
And even though the odds on that aren't really spiking at the moment, and there's been a little bit of pushback from the EU and Zelensky on this, what we're seeing is perhaps a sentiment-led sell-off. Nothing has changed on the assessment end, so we still have very tight guidance from ICE on what will be classified as a Russian-derived fuel product or a Gasoil product. It's mostly sentiment-driven, I'd say.
Wow, it's a bit crazy, isn't it? It's definitely worth talking about this. Trump, I think it was the 28-point plan or agreement that they released last week. It's very, not to get too political, but it's an aggressive agreement, and I think everyone's just in a tight spot where it could very well be agreed. I don't think just because of its aggressiveness that we should totally rule out the fact that we're going to come to an agreement. As you're saying, all of the the feelers in the market, people aren't expecting Ukraine to sign this deal, but it's getting to a point where they are feeling quite exhausted. So perhaps there'll be some amendments to make, etc. But either way, it does, the last 3-4 months, it has felt as though this is all starting to draw to an end. And that's going to be massive for the oil markets. If we do get all this crude coming out, all this LNG, a lot of, all the products, everything, obviously the refineries will take some time to come back online. So it's mainly the feedstocks, crude especially, it's going to hit the market hard.
Absolutely.
So, it'll be super interesting. But just on the back of that also, we're going into a period of potentially lower liquidity with Thanksgiving coming up. There typically tends to be some kind of funky price action when the market's out. So let's see into this week. I think you just have to be a little bit cautious that with that lower liquidity, there might be some aggressive price actions. Okay, interesting. So Gasoil giving up a little bit. I mean, let's see. The market might buy into it. We are drawing stocks, right?
Yes.
So the underlying market is still fundamentally very strong. It's just a potentially repositioning.
Yes, absolutely. But I guess the overall levels themselves can't be ignored. We're still very, very high on a crack basis on distillates. The US still remains strong. There should be strong seasonal demand around this time of year.
Yeah.
So there is strength in the market, but perhaps it's just been exacerbated by the headlines.
Exactly, and also you look at any chart like this. This sell-off looks crazy. It's huge, but we have come off from $14 margins, which are enormous, to still almost $10. Still very profitable for refiners. Still, the cracks are very strong. So even though we have given up a lot, there's still a lot to go before you see any material change to the run rates. So I don't think that's obviously going to happen anytime soon. But crude could be a slightly different picture. We came from a max bearish environment on the prompt crude cargoes to now a very strong forward curve. So we need to see a lot of physical demands coming out this week and next week in order to hit the forward curve levels, which I'm a bit skeptical about. There were rumors that a lot of the oil that was eventually cleared was put into storage. So we might see that re-entering the market this week or next week. But to go from diffs of minus 150 on 40s to plus 60 cents in the span of 10 days, I think it's going to be hard. So let's see. It feels like potentially we're going to start topping out on crude in dated, at the least at the minute. Okay, so that's Europe. I mean, it doesn't look like anything too interesting. Obviously, we've had the margin pullback, crude strengthening. Potentially will give up some of that crude strength in the next week or so. Asia, how's Asia looking for you guys?
On the distillate side, it's mainly been a Europe-led rally. We've had some pockets of demand from Asia, but really most of the moves have been just on the back of ICE Gasoil.
Okay.
So we've had the spread strengthen with ICE Gasoil and then sells right back off with ICE Gasoil.
And how about the East-West?
That's the one thing I'd say has become a little bit decoupled from the price action that we've seen so far. Because what we've seen has been the cracks absolutely ripping and then selling straight back off. But the East-West still remains a little bit suppressed. Arguably, this is down to the physical flows, since a lot of gas oil produced in Asia might not make it into Europe as a result of these sanctions. It just means there's going to be a bigger backlog of cargoes in Asia having to remain either in the region or being pushed into LATAM. So what we're seeing is East-West at very low levels. So, even things like the East-West boxes, the 1-2 East-West box, it reached historical lows of 11.5. That is minus 11.5, which is, Russia-Ukraine levels, at the start of the war. So we're just seeing a very, very suppressed complex as a result of potentially more cargoes being stuck in the region.
Wow, interesting. So I guess the next big event into, you're talking about Q1, Q2, into the new year will be Chinese New Year. So perhaps that might bring back a little bit of product strength if refineries start to potentially pull back on their run rates or something. But yeah, that is low. Wow.
Yeah.
Okay. So, I mean, the freight rates are still fairly chunky. So you kind of do understand why those East-West do end up softening a bit. But for us, for Brent to buy, I mean, the curve is just totally paralyzed. So very little price action. It looks like it is the most stable curve at the minute. The dated Dubai contracts are more volatile than the Brent Dubai contracts. So it is really suggesting that the East is not too fast to position here.
Yeah.
And then you have the US. So into Thanksgiving, arguably, the liquidity will drop off. Perhaps we'll get less interest in kind of cargo fixing, etc. But the curve also, relative to Brent, still looks fairly low. So Brent is really, at a strong premium to all other regions. No real reason why. So I think we'll probably start compressing in those kind of geographical arb levels. But again, if everything gets resolved, we should see freight get hit, we should see crude get hit. I think the environment, could get quite crazy. So yeah, it just needs to be aware of it. The only other thing I wanted to point out is, again, we get all these headlines, etc. Russia, Ukraine, all the sanctions, it was meant to hit, I think Thursday was the deadline. Still, flat price is fairly low. The front Brent spread is pretty strong, actually. I think it got up to around 63 cents. We have expiry on Friday, so let's see who's looking to buy the cargoes there. But given that potentially a lot of oil is offline, flat price looks low, which means that the market doesn't really think that the sanctions are going to hit as hard as the market has suggested. But let's see. I think there's still a bit of time to kind of get around the logistics. Okay, so I guess, as I said, we're going into Thanksgiving and then Christmas season, so it's probably quite difficult to put on any meaningful trade. But if you had to suggest something, what would you go for?
Probably on balance, the one position I'd look to kind of put on would be slightly more deferred. If I had to pick something, maybe around the Q2, Q3 region, maybe some longs on the Gasoil East West, simply because the prompt has been, pushed to such distressed low levels.
Yeah.
It might provide a good entry on the deferred East West, and potentially might even, provide a little bit of time for things like Russia, Ukraine to get resolved, which then would lead to the East West really ripping in that kind of region.
Yeah. So what levels are they at right now?
So right now around minus 22, minus 21 on the 2Q Gasoil East West, for example.
Okay, so still great at entry levels.
It is still a great entry level. You could see, if Russia, Ukraine gets resolved, we're talking about, single digit East-West numbers. So quite a lot of upside there. Okay,
great. And for me, so last week we went long TechGen dated. So I'd look to exit that now. I think it's had its run up. And a little bit more niche, I think I would go for either a short dated Dubai contract or a short structure index. So something like 812 2-week. I would short, or 812 Caldex. Very specific to dated, but generally, if you short a structure like that, you're suggesting that perhaps the physicals reached towards the higher end of the level. Cool. Well, let's see how we are in a week's time. Thank you.